You've sold your home, you've moved out of your home and you let it out. Do you need to pay capital gains tax on selling your home? Yes, you do. And this video will describe how much you will need to pay and when you need to pay it by. It says, if I lived in the property up to 8 years ago and then let it out, will I have to pay capital gains tax on the whole selling value?
Oh, that's a lovely question.
I'm going to let you have that
That's
one.
a lovely question. Sadly, some of the capital gains tax reliefs have changed in the last couple of years. But the good news is you still get what's called a private residence relief, principal private residence relief. Lots of people call it slightly different things, but it's often referred to as PPR. And what that does is it looks at your total ownership of the asset, and it then basically discounts the amount of gain connected to the percentage of time you lived in it plus the final 9 months. So what did I mean by that? Late on Monday night. So let's say in simplicity that you owned it for 10 years. The first 2 years you lived in it, the final 8 years you rented it, then you sold it. Whatever gain you've made, arguably, you're going to be able to ignore, in effect, the first 2 years of that. So in other words, 20%, because that's when you lived in it, and 20% is the equivalent of the period of time you lived in it. And on top of that, the final 9 months as well. So in other words, an extra 7.5% based on the calculation. So that means that you can ignore 27.5% of your gain before you even start applying things like your annual exempt allowance and then working out your capital gain on top of it. Historically, there was something called lettings relief. And sadly, unless you're living in the property with a tenant at the same time as you're renting it, you're not going to get that anymore. But you will get, as I say, the principal private residence relief. There are certain conditions under which you can actually extend that final 9 months of as though you lived in it, called deemed residence. So if you meet some of those criteria, it's worth looking into it in more detail. So for example, if you were disabled under a certain set of classifications and conditions, or you were moving into care as a consequence of moving out of the property. So there's some areas where you can slightly extend what that principal private residence relief gives you. But the good news is if you have lived in it as your home, you are going to get some relief.
I was just looking at another aspect of the private residence relief, and it's about whether you move back into the property.
It is. So if you have moved back into the property, potentially you can have another 3 years in between when you left and when you moved back in, as though it was your home again. So there's lots of opportunities here to kind of get the very best out of this principal private residence relief. And only this year I was helping a client. They've sold a property. They've made a gain of over £1 million. And I was able to bring their capital gains tax down to a whopping £3,000. So they were very happy, understandably. And that was all about applying principal private residence relief, deemed relief, and really working through the options of how to calculate out the capital gains tax, following the rules, of course, but also following the rules on all the different reliefs.